Joining me now, Dan Ives, Managing Director and Senior Equity Research Analyst at Wedbush Securities. Dan, always a pleasure. Thanks so much for joining us.
Great to be here. Thank you.
All right, Dan, break it down for us. We've seen Nvidia's numbers. We've seen the stock reaction. What is it that we need to know about what Nvidia had to say? Give us the highlights.
I mean, look, Colin, I think those are as good numbers as you're going to get relative to $500 billion that they have in terms of Ruben and Blackwell demand. Guidance that they basically raised, I'd call it, 2 billion above whisper numbers. And this to me just speaks to what's going to be the early stages of this AI revolution playing out. And I think that's just another validation for what we saw.
But if this is as good as it's going to get in terms of the numbers, and it wasn't enough to put the bears back into hibernation, what's it going to take? I guess what fuels the next chapter of this AI rally?
Look, I mean, it's well, first, I don't view it as this is as good as it gets. I mean, it's accelerated growth quarter over quarter. And I think as you look into the next 12 to 18 months, you're still early days in terms of when this is all going to play out. But as it plays out, I think more and more investors will understand the numbers that you're seeing today. I think they're underestimated by 20, 30% over the next few years. And that's why you own Nvidia here. It's still a cheap stock.
So why do you think that the 5% gain we saw in Nvidia, which really pushed the entire market higher, fizzled out today? What went on there?
I mean, whether it's Fed-driven, concerns about very similar as Palantir, if they put up such a strong number and the stock sold off, what does that mean? Is it a risk off? But it's my view, like these are buying opportunities for winners, not just like Nvidia, but for hyperscale and for big tech. But it's my view, like you're in year 3 of an 8 to 10 year build out. That continues to be the piece of it.
At this point, we've heard from all of the Mag 7 in terms of Q3 earnings. What's the biggest takeaway that you have from the Mag 7 earnings?
AI is not a bubble. I mean, it's validation from hyperscalers, from Palantir, from Nvidia, from chip names. I mean, look, the bears will continue to argue it, and they'll argue it the next few years. But the reality is this is not a bubble. It's a fourth industrial revolution that's being built out.
If this is a bubble, and I know you don't think it is, but if it was, what would bursting look like? What companies would still be intact? Which would implode?
I mean, if this was a bubble, when I'm in Asia, I'd see demand softening. I wouldn't see 12-to-1 demand for Nvidia chips. I wouldn't see it across other chips. I wouldn't see it across hyperscalers, across Palantir. I mean, to me, that's my whole point. Like, Anthropic hasn't even gone public yet. I mean, the point is, like, how could this be a bubble relative to where we are? We're talking about trillions of dollars that's going to be spent over the coming years, still early days.
Okay, so not a bubble. We have seen a drastic difference, though, in terms of how the Mag 7 specifically is performing this year. If you take a look, Meta and Amazon are essentially flat on the year. Alphabet's up, some 50%. Nvidia's up 35%. So I'm curious, given all of that, how is your tech and AI playbook changing as you think about next year?
I mean, to me, it's more you play the second, third, fourth derivatives on software, on cybersecurity, on infrastructure. Nebius are good examples. Oklo in terms on the power side. I mean, to me, that continues to be the play, the second, third, fourth derivative of AI, along with the hyperscalers and Nvidia.
Along with the hyperscalers, so you think that there's still more room to run for some of those big names?
We're still early days. I mean, you're only just barely penetrated on U.S. enterprise needs. Around the world, we're basically negligible. And for the first time in 30 years, the U.S. is headed China on company tax, led by U.S. big tech.
Is the weakness that we're seeing in crypto a red flag for the tech trade? Are you looking at that at all as like a canary in the tech coal mine?
Look, I think there's obviously it's a risk off across the board. You're seeing that. Obviously, you see it with a name, in terms of crypto. But I just think you're seeing a risk off across the board. But I think it's short-lived. I think tech stocks rally into year end despite what we're seeing in the sell-off.
Okay, so the declines that we saw today, Nvidia down 3%, now down, call it 10% this month, might be the cheapest that you could get it.
Look, could it go cheaper? Yeah, it's possible. But I think this is going back to 5 trillion and eventually 6 trillion. That continues to be my view where this is all harnessed.
Is there anything that you would avoid right now? I know we always talk and you're bullish on so many of the big names, but is there anything that you look at right now in the AI and tech space that you would say, you know what, I'm good without that?
I mean, look, when you go further down, like quantum or bullish on, but maybe some of those names could sell off more. I mean, so you gotta be careful maybe on like certain selective names, but I mean, to me, it continues to be early days where this is all going, and that continues to be the theme in this AI revolution. That's our, look, that's our view. I don't. I mean, you've known each other for years. I don't get just caught up in like stocks sell off today, markets telling you something. I focus on like my time in Asia, my time spent around the world. I see the demand, and that continues to be my thesis. And I think further validating what we saw during earnings season.
Okay, so early days, but how much longer will Nvidia specifically have the lead that it has? Because we know that it's dominant. We saw it in the numbers. But who is the biggest threat to Jensen Huang's crown in the next, say, 18 months?
AMD, Huawei, yeah, that's some of the threat. But the reality is, Nvidia continues to be. It's one chip in the world fueling the AI revolution. That's Nvidia.
How should investors measure the China risk at this point? Is it a solvable headwind at this point, or will it continuously be the Achilles heel of the AI story?
I mean, look, it's like it's the biggest chip on the poker table for Trump in terms of negotiations, U.S. and China. But the reality is that I think Nvidia ultimately can get re-access to the China market, and that's not baked into numbers. It's a risk, but I think a manageable risk relative to what's baked into the stock.
Okay, so just final thoughts as we think about these early days, the third inning, as you say. Not sure if there's extra innings in this ball game, but just final advice to investors as they think about, how far AI has already run in terms of the trade, but also some of the weakness that they've seen.
Just the beginning, the white knuckles is just all part of it. I think we're going to look at these as opportunities as it all plays out. Second, third, fourth derivative. More and more companies go toward it. Sovereigns go toward it. And for the first time in 30 years, the U.S. is ahead of China when it comes to tech. And that's why I think NVIDIA, Microsoft, Oracle, Palantir continue to be core holders.
All right, we'll leave it there. Dan Ives, always appreciate you joining us. Thank you.
Thank you.